Welcome to Silicon Dragon Talk. Today we're going to be talking about Alibaba and the prospects for its IPO. And we have three expert guests here to talk about this today. We have Nazar Yasin. He is a VC investor in emerging markets at Rise Capital. Thank you for being here.
Thank you for having me.
David Williams, an investment banker with Williams Capital Advisors. Thank you, David.
Thank you.
And Jay a VC investor from Translink Capital.
Thank you so much.
So what do you think, jumping right into this, what do you think the prospects are for Alibaba's IPO? It's coming up pretty soon. What do you think the prospects are? Should investors jump in?
Yeah, I think it's a tremendous asset. You know, a lot of people talk about Alibaba being like the Amazon of China, when in fact it's more like the Walmart of China. You know, Walmart accounts for about 7.7% of US retail, and Alibaba accounts for about 7.4% of China retail. So it's a much, much larger company than people give it credit for.
Yeah, so they're very parallel companies in a way then. And you can't really compare it to Amazon or eBay. It's more like the Walmart, like you say. So the potential is huge. Yeah,
I mean, just for comparison's sake, Amazon accounts for, now they don't break out exactly what their gross merchandise volume is in the US, but you know, best guess it's around they account for about 2.5% of US retail. So they're about, at best, 1/3 the size of Walmart. Now, Alibaba, which started its consumer brands, Taobao and Tmall in 2003, so 8 years after Amazon, has achieved a similar market share of China retail that Walmart has in the US, not Amazon. So it's a tremendous, tremendous commerce platform.
Sure. So what do you think the investment prospects are? Should investors jump in? David, what do you think?
I'd say it all depends on the valuation. At this point, you know, as of today, the latest I've heard is that it's going to be priced around 150 billion in terms of valuation. That's at the low end of the range. If that's the case, which I think is the right thing to do, certainly I'd invest. And the point is that the underwriters are doing their best to avoid another short-term Facebook-like situation where the IPO rolls over and goes down. And so I think at that kind of valuation, sure, I'd be a buyer. If it's at the $250 billion range, I'd be more cautious.
How can investors get in?
Realistically, you can get in at a higher price in the IPO if it's priced where I expect it to be. Or in the case of, if it ends up like Facebook, if it's a tough week in the markets or it's priced higher, it'll be only too easy to get in. I
see. What do you think the date's going to be? I've heard everything from September 10, which is Jack Ma's 50th birthday, to 9/9. What do you think the date's going to be?
The roadshow will probably start on September 3rd or 4th, and they'll probably price it around the, I think the 14th or 15th, if I'm correct.
Oh, okay. So early in the week then.
I think they're talking about a Monday pricing, which is unusual.
Yeah.
But they're trying to avoid some of the religious holidays later in that week.
Right, right. Well, what are the risks for investing in Alibaba? Here you have this giant e-commerce company that really was unheard of not that long ago. And it's structured with an unusual corporate structure, at least for America. And I'm wondering, should investors be looking at these risks pretty carefully before jumping in? You have an offshore listing through the VIE structure, which is common for Chinese companies, venture-backed Chinese companies. But are there risks involved for investors in getting into a company that's so tightly controlled by China?
Well, you have to take a leap of faith. Basically, the VIE structure provides one degree of separation, but investors are comfortable enough with that when there's lots of upside. I mean, when you've got that kind of growth, you're willing to take some risk. But in this case, you've got 2 degrees of separation because you've also got a dual-class stock listing, similar to Facebook and Google. So you've got 2 degrees of separation. You need more growth to put aside the concerns, and therefore it goes back to price. And to the extent that it's valued lower than analysts expect it to be worth, which is the case, at least what they're talking right now, then investors are compensated for that risk.
So Jack Ma has been quoted as saying the company culture is really built about employees first, customers second, or customers first, employees second, and investors third. How's that going to play out on Main Street or on Wall Street?
Well, I mean, you look at a company like Amazon, where Jeff Bezos for a very long time has said, I'm building a very long-term focused firm. So if any of you public investors are very short-term minded, get used to it. I think when you're building a big enough company, chasing a large enough opportunity, I think to a large extent investors will be patient. And the nice thing about Alibaba versus an Amazon is it's obviously much less capital intensive. So as of today, they do not have the type of offline infrastructure that Amazon has in the form of warehouses and things like that. So it's quite a high margin, high growth business. And just to your point about price, I mean, when you sort of think about the fact that Walmart's a $250 billion market cap company, the U.S. is China's about 80% the size of the U.S. retail market, and that gap is shrinking. Both Alibaba and Walmart account for the same share of total retail domestically. Is it unrealistic to think that Alibaba will be worth $200 billion shortly after pricing? No. So, therefore, pricing it somewhere around 150 or so gives people, significant visibility into the upside there.
What do you think is it that's really the magical thing about Alibaba? Is it the leadership? Is it the innovations that are behind it? Is it the commitment? What is it that makes Alibaba so special?
I've had a chance to interact with some of the management team at Alibaba, and one of the things that I've been consistently impressed with is the fact that they actually are specifically looking in their employees to have good people on board. And it's a very interesting recruiting practice that I'd heard of, where they actually go through a very thorough reference checking and screening process to make sure that fundamentally the people that they hire on board are quote-unquote good guys. And I think that served them really well. They also still remember their roots, having started from a very small startup. I, in fact, remember in my first venture firm at Vertex Management back in 1999 that Jack Ma came to pitch to us in our Silicon Valley office. And even at the time, he was obviously starting out very early, but had obviously high aspirations, but very modest in his approach as well. And obviously that served him well. Even today, after all the success they've had, I've had a chance to observe how they interact with a number of our portfolio companies that they've co-invested in now. And they take a similar approach. They try to understand, because they've been in the startup shoes, and they actually really are accommodating in their approach we have. And I could talk more in detail a little later of how they approach these strategic partnerships as well as investments. And it's, I've never seen anything like it. It's quite refreshing.
Yeah, I think Jack Ma has true leadership ability, and one of the things that I've been impressed about at Alibaba is that its innovation and the fact that they've had year after year of bringing out all kinds of new e-commerce plays, starting with the original Alibaba.com. And I have a few charts here that showcase the growth of Alibaba, starting from a global wholesale business back in 1999 to China wholesale in 2000 to Taobao, which competes with eBay and actually beat eBay in China in 2003, to online payment, online exchanges, global brands portal, cloud computing, phone messaging apps, shopping apps, delivery services, even a U.S. shopping site. So I think that this is part of the appeal of Alibaba, is that they've really captured so much of this market, and they have an 80% share of e-commerce in China. And of course, Alibaba already dwarfs the U.S. giants in e-commerce. It's more than two times larger than Amazon, and much larger than eBay is as well. If you look at how Alibaba is going to compare with the biggest tech firms in terms of big tech firms in terms of market cap, Alibaba is right up there with Apple, Google, Microsoft. At the low end, it's only right behind Tencent. So I think that this shows the power of Alibaba as it gets ready to go public. And these are the estimates of the market cap for Alibaba. And David, I think you were talking around 150 billion, so that's sort of in the mid-range here. And in terms of tech IPOs, Alibaba ranks right up there as #1, and looks like it's going to surpass Facebook, which was the last giant in 2002. I mean, what do you think that this is going to happen? That they actually are going to be a larger IPO than Facebook?
I think so. I mean, it's. I think a lot of people lose sight of the fact that when Alibaba goes public, it really is going to be a watershed event for not just Chinese internet companies, but just emerging market internet companies. You know, at a $200 billion market cap, they will be the second largest internet company on the planet, only behind Google. That's incredible. And so, you know, a lot of people sort of wonder, how can the Amazon of China be bigger than Amazon? That sounds crazy, right? But it just sort of underscores the fact that, you know, in markets like China, in emerging markets, internet companies can play a different role. Since there aren't as many companies that look like Walmart, there aren't as many offline companies that are of size in these markets. An internet company can become that company, can become the Walmart of China, not just the Amazon of China.
Right, right, right.
So it really is going to be a watershed event in many ways.
And what do you think the impact is going to be on other Chinese companies that may list in the U.S.?
As long as the stock goes up, you're going to see a lot more listings. So it'll open the door.
Yeah.
And you couldn't ask for a better environment right now in terms of IPOs, both for U.S. companies, but particularly for Chinese companies. We've got the last couple of years of accounting scandals mostly behind us. We've got Chinese economic growth stabilizing after many quarters of disappointments, and you've got globally low interest rates. So U.S. investors in particular are looking for growth. And first they turn to Silicon Valley, and then they look for more growth, and that usually is China.
Mm-hmm. Yeah, so talking about growth, I mean, the market potential for Alibaba in China alone, right now, in 2013, it's already very large and set to double in 3 years. So that's online shopping in China, which is just exploding. And right now, showing another angle on the market potential, online shopping penetration in China is really pretty low. It's only about 8% now. So, I mean, this is much lower than most markets, than the U.S., for instance, right? Or most developed markets. So this just shows you the vast potential. I mean, what could hang Alibaba up? What could be the thing that really happens that derails them? Is there anything that's lurking out there?
Well, I mean, you know, China's economy continues to perform well on a relative basis. I mean, you know, people are used to the lofty heights of, you know, low double-digit, you know, high single-digit growth in China over a very long time, and you know, mid-single digits is still pretty good, right? And so, you know, particularly as the internet continues to take share and, you know, software continues to eat the world, so to speak, to paraphrase Mark Andreessen. But you know, there's a tremendous runway for Alibaba to continue growing both domestically and increasingly abroad, which, you know, they've obviously been making some interesting investments overseas to try to facilitate some of that.
Yeah, well, what kind of investments are they making overseas? Is it mostly in the tech space that they already know?
I'd say that they're doing the same thing that U.S. companies are doing, which is, yeah, they're doing e-commerce related acquisitions, but they're going beyond that. Just as Amazon has moved beyond books and other e-commerce and now into AWS, et cetera. So I'd say anything that's even tangentially related where they could have an edge, they're going this direction, just as Amazon is looking to go that direction. And it's increasingly global, the business. And you've seen Baidu move into Brazil. And I think the Chinese companies have an advantage in that in their home court, they're somewhat protected due to regulations, but also due to the quirks of the local market. Less so the case here in the U.S. for the American companies like Amazon. So I think the Chinese companies can build on the stability of the markets they're in China to make acquisitions over here.
Yeah.
100% agree.
And so right now, only a small percentage of Alibaba's overall revenues are outside China. And I mean, what do you think this is going to be in 5 years? They've already made, I think, David, you had some statistics here that show that Alibaba's already made 9 deals in a pretty short period of time, and much more than we've seen from other China companies overall. What percentage of, is Alibaba going to really become an international company? Is it going to have a huge impact here in the US market?
Well, you know, as of 2013, I think their non-China consumer retail business was something like 16% of total revenues, and that'll certainly go up. But let's not lose sight of the fact that their core China retail business is still growing at like 40% per year. 40% of a big number is a big number. And so they're adding a lot of revenues just in China retail. So, you know, will the revenue mix, you know, overnight suddenly become 50-50, you know, non-China versus China? I don't think so, barring some large acquisition, which, you know, potentially now that they will have a public market cap and will be publicly traded, that gives them a lot of currency to facilitate acquisitions. Now, historically, outside of China, you've been talking about, you know, $100, $200 million types of checks. You know, could they start writing the sort of, you know, $5 or $10 billion checks that Google and Facebook have been writing recently? You know, with a publicly traded stock, that becomes much more feasible.
Interesting. So Jay, you've seen some of the investments that Alibaba has been making. What's the influence that Alibaba brings to these companies, these U.S. tech startups that they've been investing in here in Silicon Valley?
So it's been really interesting to observe. So I've been on the kind of corporate and strategic investment side for over a decade now. And the approach that Alibaba has taken, to me, is unprecedented. So the typical strategic investment is always led by a partnership conversation, which if you think about a big company and a startup, it's very difficult to actually consummate because they're just operating at different cycles in terms of time frames and activity. And to try to squeeze in a partnership when a startup is trying to raise capital, for example, for growth, is a very difficult balancing act. So the approach that I've seen Alibaba take, if it's in a space that is of interest to them, and that could be to strengthen their existing business, it could be to look into other completely new areas of new business, or also to go after areas that their competition is strong in, then if they meet the company and they like the team, their philosophy, I've observed, is to basically mix blood, so to speak. So they will make an investment in the company, I would say substantial relevant investment amount, so that the company doesn't have to worry about financing, and I would say fairly generous terms. And then after that strategic investment is closed, they will work with the company for months, being aligned on the same side, being on the same page, without having to rush to consummate a partnership that is in the mutual benefit of both sides. And I've actually seen that happen on now a couple of occasions, and I've been super impressed with how longer term their perspective has been. And I think that approach, which is really non-traditional for most strategics, I think is something that other strategic partners should be aware of and should look at very carefully.
Okay. Well, what do you think the IPO means for Yahoo? Is this a great home run for Yahoo now, that's been with Alibaba, partnered with Alibaba for a long time?
It was certainly a wonderful investment, you know, back in the day. You know, it's a little bit of a mixed blessing, though, for Yahoo right now. I mean, depending on where you mark Alibaba in terms of valuation, you arguably have a negative enterprise value for Yahoo in terms of where Yahoo's trading in the public markets today. So, you know, what comes next? You're gonna realize this investment. You're gonna give some money back to shareholders. You're gonna be left with a bunch of cash left in the bank. I think there's some really important questions that Yahoo needs to answer in terms of what are you going to do with the remaining capital, and how are you going to turn Yahoo around after Alibaba has been really propping up your stock for such a long time.
So you expect them to make some major acquisitions as well, or rethink their entire business, or?
They need to do something. I'm not sure what it's going to be, but they need to do something.
Okay. So Alibaba and Jack Ma, what's the future for Jack Ma? He's going to be 50, September 10. He's been with the company from the very beginning, 1999. What's the future for Jack Ma? He owns almost 9% stake in the company. What's next for him?
It's hard to see him walking away, right?
Yeah, so he's going to maintain tight control, you think?
In most cases, in China, that's what we've seen, right?
Yeah.
A handful of individuals have spent more leisure time, but the majority of them just keep doubling down, going into more businesses. Yeah.
Right. So is that a risk for investors that Jack Ma is, going to have such tight reins on the company going forward?
I totally disagree. I think any tech company where the founders are not active or have passed on or passed away, it's difficult for them, I think, to make the big bets to enable them to keep pace with the change of innovation. And so the fact that Jack Ma is going to be involved, is going to be very actively, tightly controlling the company, although quite frankly, from what I hear, he's not even tightly controlling the company even today. In fact, for the past several years, he's given a lot of delegation and room to his management team to maneuver. But he'll be in the background. My understanding is for major transactions or major partnerships, he is heavily involved. And I think the fact that he will be involved enables Alibaba to continue the success that they've had. I would actually be worried if he wasn't around.
Oh, okay. Well, they have a management partnership structure which gives a lot of the board appointment control to this management partnership. That's rather unusual, right?
So that's a very US-centric way to think about corporate governance. And in a certain way, I understand where that's coming from. But if you look at the success of Alibaba or other companies, especially out of Asia, beyond just China, in Japan, in Korea, Taiwan, that we're very familiar with, a lot of the success has been driven by founders that act as patriarchs of the organization, that make those major decisions, are not afraid to make big bets when they need to. And quite frankly, even in the US, I would argue that what Mark Zuckerberg is doing at Facebook, or Jeff Bezos is doing at Amazon, those are the type of game-changing, big picture deals and innovations that I think enable tech companies in particular to keep pace.
So Jack Ma has said that Alibaba is going to be around 102 years, spanning 3 centuries. Any doubts about that?
That one, I don't know. That one might be hard to predict because the pace of innovation and whatnot. Who's to say that there won't be a Alibaba killer in the next 10 years that emerges and eats up their business, as Alibaba's ate up the business for other internet companies as well as traditional retail?
We're still in the pretty early innings of the internet story as a whole, I would say. I mean, look back at another communication medium like cable TV. Cable companies are still growing. It's been 50 or 60 years. And so a lot has happened in the cable industry over those 50 or 60 years. But the internet, we're 15 years into the internet in China, really. 20 or so years globally. And so it's early innings. Could they stick around for 102 years? Sure. My guess is they'll look pretty different 7 years from now than they'll look today.
The odds are better now than they used to be. When I first moved out there, most of these companies didn't even have licenses yet. So the odds have improved.
Okay, well, let's leave it at that then. 102 years, 3 centuries. Who can argue with that? But thank you very much for joining us today, and look forward to the next show.
Thank you.
Thank you.
Thanks.